dividend for the year to June.
I don't own gold shares.
1.1%.
About 1%, yeah.
Okay. Earnings yield 4%. You're going to get double that on government bonds. Are you buying? And it's not that they're doing
gold
badly.
Shares. I'm not going buying gold shares, but I'm buying other shares.
The market's gone nuts, David. It's discounting perfection, and we're moving into a seriously difficult time. And Liberty? Did you look at Liberty's financial results today?
But markets are turning around. You mustn't ignore the signs. I think that you've got to look at overseas markets, and there's a huge percentage of our market that earns dollars or earns income overseas.
So let's not worry about Warren Buffett and the fundamentals.
Now, Buffett's going to come out with great results.
Of course he is, but let's not worry about the fundamentals in companies. Let's just buy.
You must become, what do they call it? I'll get the word. I'm going to think about it. No, the market gives you a lot of clues about what's going to happen, and the fact that money is flowing and people feel so confident, I think, is a very good sign and a signature. A sign that we're over the worst. I don't think that we thought that we'd get anywhere near 25,000. I'm surprised at it, but I can't stop the money coming in, and the fact that people are now taking the decision to actually buy shares. They've thought about it. They've thought, and they feel a lot better than they did a few months ago. Also, no one wants to hold cash with interest rates as low as they are. So you stick with quality companies. Even Goldfields has been around, over 100 years. They've been mining gold for a long time. They know how to do it.
So what the heck? 1.1% dividend yield. There we go. Well, that's why we listen to this program, I guess, because we get David, the raging bull, who you weren't quite as bullish in October last year, but you're getting back to that level.
I was very nervous.
And
now
you're very bullish.
Yeah. Okay. I feel. In fact, I take comfort from what happens in the markets. And
but how can you take comfort when you see what's happening to company profits?
Yeah, I think that we have to deal with. South African company profits are going to be under pressure for some time to come. But commodity prices are picking up. That's going to help us. Interest rates are coming down. And you cannot ignore the amount of money that is being pumped in by governments. The UK government again pumping in. Alec, when we have to wean ourselves off that, God forbid. But I mean, for the next few years, I think we're going to have strong markets.
I suppose it's a bit like what happened in Zimbabwe when they were pumping money in. Their share prices went up because of inflation. Is that your thesis now? Let's buy the companies because there's some assets and.
No, we're going to have it.
Inflation's going to raise all boats.
We're going to pull back a bit, but we're at 25,000. So even if we come back 1,000, 2,000, that brings us back to 23. Remember, we were at 18 in March.
25,046 is where the market closed today. We did say a couple of weeks ago, David, according to Dow theory, it can get to 25,500. And then, according to Dow theory, it should come back very sharply. But if it gets above 25,500, then it's a new ballgame.
It is a new ballgame. And Alec, you've got to tread this. Despite my bullishness, you've got to be very, very careful, and you've got to be nimble, because who knows what can happen? Who knows what news we can get out. But in the meantime, hell, the cash is coming in.